Hey there, I'm Mitch Goldberg. Thank you so much for joining me. Wow, what a day. Stocks soared today on news of a vaccine, I should say potentially coming because there are still no guarantees from a company called Pfizer. But the vaccine looks very promising, and the company itself has had very good things to say, including a 90% effective rate in generating an immune response to COVID. Game changer. You're watching Be the Boss of Your Money. It's the place that you go to learn about personal finance, investing, business strategy, and so many other things that fall underneath that umbrella, those umbrellas. So, we're going to roll a quick introduction. We're going to talk about the stock market, what to do next, what to do if you got out of the stock market, how are you going to get back in? And maybe for some of you, it's time to rebalance. Maybe even take a little off the table or shift. There's so many choices that you have, but we really need to clear up the confusion and figure out what happened today so that we can move forward. So what I'll do now is roll my quick intro, and we are going to get into this in such a deep dive, but fast. It's a high energy day. Here we go. Okay, we are back. Thank you so much for joining me. You're watching Be the Boss of Your Money. If you're just tuning in now, I just want to say thank you so much. If you have any questions, ask them in the comments. Ask them in the comments below. I would love to answer your questions. It's the most fun I have when I do this. So welcome to you if you're watching in the live stream. Welcome to you if you're watching in the replay. And if you're watching in the replay, ask your questions just like as if you were watching in the live. I'm going to start on a very positive note. I'm going to do a quick shout out to my friend Wendy, who gave me a heart. I am so glad that you found your cat. That is we need more good news like that. Of course, you don't want to lose our cat in the first place, but still, it's a happy thing. So thank you for sharing. Very happy for you. These little things in life, these are actually what life is all about. They matter. They count. So we're going to take a look out there and see if anyone has any questions. My friend Peter is out there. Hey, Peter. Peter says, hey, Mitch, buddy, so good of you to join us. Stock soared. What the heck is going on? Because stocks have been rising, really starting with the election. They've continued to rise all week last week. Yeah, a little bit of a mixed day this past Friday. When I went to bed last night about 1 a.m., I'm kind of a night owl. The futures were up almost 400 points. So I was expecting a good day today in the market regardless, just a continuation of the rally. People are getting comfortable with the fact that there will be gridlock, so there won't be any major policy changes with regard to taxes. But then Pfizer comes out with this news, 90% effective rate with their advanced trials, of COVID vaccine, and stocks soared. At one point, futures were up about 1,500. I'm not sure if the Dow is up a full 1,500, but it was up about 1,350 points. I saw at one point. I would like the rally a lot better if it actually closed up 1,300 instead of giving away about a third of its gains on the day. I know that sounds so spoiled and silly. I should just enjoy a day where the Dow went up 3%. So let's take a quick look at the action. I've got all my notes here because I don't want to miss anything. But let me tell you, we had a battle of the Trump versus Biden tax policies. It turns out neither one of them is going to come true, but Biden, he didn't catch the blue wave. And even if he does get the Senate, if the two runoffs in Georgia go blue in the Senate runoffs, it doesn't mean that you're going to have, 50 Senate plus the tiebreaker from the vice president. But it doesn't mean you get every Democratic senator to go with Biden. And the the line, the advantage that the Democrats had in the House of Representatives is very, very small, very, very small advantage, very small majority. So I don't think we get like these crazy policies in terms of tax issues that affect investors. That's what we're all about here. We're all about here, making money and being in the stock market, investing personal finance. Okay. So we're leaving the personal political stuff on the side, but this could be a game changer. I mean, I so badly would love to get on an airplane and fly to Florida and see so many friends and relatives. I so want to get out and give my friends just hugs galore. Like, can you imagine like going out and seeing all of your friends, no mask, and everybody just like a total crazy freaking hug fest? Like I could actually like I could tear up a little just thinking about it. I could tear up just to get out there and get back into the handshakes, the networking, and the friends. It would be so great. My kids don't have to go to school wearing masks anymore. It would just be so amazing. All right, so but with all the news going on and gridlock in politics, pardon the pun, but a COVID vaccine trumps everything. Let's take a look at the action today. First off, you have to know that you saw the Dow go up 800 points, up 3%. So we're going to talk about the difference between the major indexes, because if you can understand this, you're going to understand why, if it was such a great day, why was the S&P up less than half percentage-wise of the Dow? And why the heck would the Nasdaq be down? So maybe today wasn't as good of a day as you think. And maybe people are going to open up their investment accounts. You go online, you take a look at your investments, and you might see that I didn't do that great today. What's missing? What happened? And yet the Russell 2000 was up almost 4%. That's small cap stocks. They're more sensitive to the economy because they get more of their revenues domestically. And then you have the VIX. You would think the VIX would be down if we have a positive news on a COVID vaccine. The VIX is the fear gauge. That should be down today, not up. So by no means do I think we're out of the woods. And I don't like it that we saw a Dow up over 1,300 points that ended up only 800 points higher. Tom Lee from Fundstrat, a well-known market bull, says we're just getting started. We could quickly see another 10% rally in the market. The industrials, this is the big winner, the industrials, the oils, the financials. But look at this. United Airlines, American, Korn Ferry, Boeing up 13%. Oh, wow. These are stunning moves. And you're going to see what happened because the FANG stocks just got crushed today. Facebook down, Apple down, Amazon down over 5%, Netflix. Google was up a little tiny bit, up a whole $1.69, but continuing a really good earnings report, and that stock is considered to be the cheapest of the super large cap stocks. Microsoft up, it's up a lot this year, but still getting hit pretty hard. In fact, Microsoft and Apple, they're part of the Dow. So if those stocks were up today, imagine how much more the Dow would have been up. But what happened is the Nasdaq was up today, and then by the time you got to the end of the day, it just gave up the ghost, and that's what happens. Okay, there's a rotation going on. Reopening stocks. Where's all this money going? American, UAL, Delta, Carnival, Norwegian, the Royal. I just said that out loud. Yeah, Royal Caribbean, Planet Fitness up 16%. Cinemark Holdings, Southwest. Southwest was like the loser of the day, but it was still up almost 10%. Look at that. And then you take a look at the sectors. Energy stocks, you can't even fit the number and the arrow. It's such a big number. But energy stocks up 14% today. Financials, industrials. What do I always say? When the market goes up, if you want to see confirmation that investors are excited about the economy, you want to see industrials, financials, and energy go up. That's what you want to see. That's what you had today. This is such a bullish sentiment for the market. Even though the Dow closed off its high of the day, it's a very bullish sentiment. So let me stop sharing the screen. And there's a couple of things to go by, okay? First of all, there's a excuse me, a little verklempt. There's a lot to go by because the vaccine came out today, and there are people out there saying how interesting. Well, the vaccine's not approved. It's just that the company making the vaccine and running the trials, Pfizer, said that the results have been very, very good. It's still not a guarantee that the FDA approves the vaccine, and it's not a guarantee that we don't get more bad news. How many times in the last 7 months, raise your hand if you know, I really don't actually have a number, but just a lot of times, we have seen the market skyrocket on hopes of a decent, we've seen the stock market rally on positive vaccine news so many times, only to be dashed by a problem with the vaccines. Somebody got sick, or unfortunately somebody died from the vaccine. It's taking longer to recruit people into the trials, or the virus mutated maybe. So we have had our hopes dashed so many times with vaccine news, and we get excited about it, and then the market plunges again. So take it easy. I'm going to tell you what to do in a moment, and we're going to talk about how to play this rally and if you should even play it. Okay, and why I'll give you the number one reason why I'm bullish, but not on everything. Okay, so yeah, I know there's always something to be bullish on. There's always something to be negative on, but there are going to be a lot of people out there, conspiracy-wise, saying that Fauci must have known about this. Dr. Anthony Fauci, from the head of infectious diseases, right? The department that he's head of, he's not in charge of like infectious diseases, literally. I mean, you know what I mean. Okay. But some people will say, wow, they held off on this news until after the election. If this news came out last Monday, the day before the election, maybe we would have had a different political outcome. I don't know. I mean, I think that's a little conspiracy. I think the company made the announcement when they had the information that they had, but you could go ahead and ask Pfizer that. I'm just saying that, so if I can preempt anybody who's watching this from coming out and say, oh, I think it's a conspiracy. I've heard a lot of conspiracies. Yes, I know the timing, but we always knew. Let's just listen. We always knew that there was going to be vaccine news at any given time. We always knew that news is coming out, and we all were pretty much conditioned that it should happen in November. Okay, so let's go on. All right, reasons to be bullish, reasons why this could continue. Cost cutting. We went into this horrendous pandemic, economy shuts down, and even if the economy reopens, it doesn't mean everybody's going to want to go out there and go out to restaurants and go out to eat and get back into the economy. But so it's not like everybody's going to participate. And if every state just came out and said, everybody just do whatever you want, it doesn't mean the economy goes back to being normal, because people are still afraid. Okay, I've said this in the past. I said on March 23rd, that was the low. Actually, March 23rd was a Monday. I said this past Friday, March 20th, is the low of this market downturn, of this crash. I said that right here on Be the Boss of Your Money. Time to buy. Remember? But I would rather people stay in because they have to stay in, as opposed to being afraid to go out. Because now you have to have this whole psychology shift that you have to get into. That's a really hard thing to change. And I think we do have that bad psychology where people are just, rightfully so, afraid to participate in the economy. They're going to the gym, going out to restaurants, going into their offices, commuting on public transportation, flying, going to vacation spots, etc. Vaccine, boy, that would change everything. It's not an overnight solution, but stocks go up in advance of that by saying, you know what, 2020 is a wash. This is just, it's over. But maybe by the second half of 2021, if people start getting this vaccine and it's working, the market will trade up now on anticipation of that moment. But the real reason to be bullish, two words: operating leverage. Companies have cut costs. so much. The cost cutting has been so deep that it just takes a little bit of economic enthusiasm from consumers to get back in. And all that money just goes right to the bottom line of companies. That's what operating leverage means. Companies have great operating leverage, and they're not going to hire back people as quickly as they fired people. Even you see it in the employment figures. We lost like 22 million jobs in a month, but 7 months later, we've gotten about half the jobs back, but the rate is actually slowing down. So it's going to take a little bit longer for companies to rehire people, which means when people get involved in the economy again, we start living our lives, there's just a ton of operating leverage built in. I don't think we'll ever take for granted the joy of going to, a baseball game or going to a party or going out to dinner with friends. I mean, I'm all giddy. I'm like all giddy from the news. The whole market's giddy, but we've got to come down. Got a couple of people out there. Jay, you are out there. Hey, Mitch, this reminds me of the rally after the U.S. killed bin Laden. The anticipation of the vaccine news caused a profit-taking event. Okay, listen, sometimes markets, excuse me, it's very dry. So sometimes markets rally on good news, and there's not enough to follow it up. And that's what happens. Peter's asking me thoughts on Sam. I don't want to comment on individual stocks or thoughts on individual stocks, but certainly we can talk about this later. Sam Adams. I don't think you mean surface to air missiles. I think you're talking about Sam Adams, the beer. Okay. Yes. Yes. Samuel Adams. Okay. Alex is out there. Hey, Mitch. No, this news has been around in small bites. The president said it would be available in November, and the drug company said it would be sometime after Election Day. Yes, they did. This is a week, and really the announcement affirms their earlier statements that might be approved on an emergency basis around the end of November. So this is just on track. Right you are, my newsy friend. Scotty is out there. Hey, Scott, good to see you. Thank you so much, Scott Rosenberg, for joining me. All right, so the reason to be optimistic is operating leverage. But it's not going to be all-inclusive, because remember we just went over the FANG stocks, how like Amazon and Facebook and Microsoft and Apple and Netflix, and they were down. The work-from-home stocks, money shifting to the economically sensitive, cyclical type stocks, and that favors consumer discretionary, like airlines, for example, vacation spots, a Starbucks, a Disney. It favors industrials. It favors energy. These stocks have been rallying for a while. By the way, shout out to the Robin Hood traders out there. You guys were the first ones to jump on the cyclical bounce when everybody said don't do it. You did it. I commend you. I applaud you. And I've been, by the way, touting the Robin Hood traders from day one here. I've made videos about it. So good for you. Keep up the good work. I think this continues, this rotation. And I'm not saying that, look, I've been saying it all along. Don't just come out and say, or don't just go out and sell all of your work from home stocks. This is not a signal to go from one side to the next, from all technology stocks to all economic reopening, economically sensitive stocks. I think you have to have both, in my opinion. And maybe it's time for a shift. Maybe it's time for rebalance, And if you haven't done it yet, I don't think it's too late. And you have nothing to complain about all the money you've made on the Pelotons and the Zoom videos, which those stocks got hit pretty hard today also. But it is prudent to be diversified. And diversification, while this is not a strategy to increase gains, it is a strategy we use to mitigate risk, but generally won't protect your account from going down in a generally down market. There, I got my disclosure in and explain what diversification is at the same time. What do you do if you want to put money in the market and you just missed it, or you got out, you got too conservative, you got scared last March or last April, and you took a lot of money out and you're just waiting to get back in? First of all, it's one thing to get out of the market. But then when you say you're going to get back into the market, when the market goes up, you'll say to yourself, well, now it's going higher. I could have bought it lower, so I'm going to wait till it goes lower again. And if it goes lower, Then you'll say to yourself, but now it's going lower. I'm going to wait for it to go lower again because, it'll go lower. And then it goes back up. And you go, oh, I missed the low. I'm going to wait till it goes lower again. It just becomes endless procrastination. What do you do now? You start to nibble. You start to nibble on these industrial, economically sensitive type stocks. These stocks are still way below their highs. You can take a look at them. You could take a look at investing in the index funds. And I've often said, look, I'm a very big user of ETFs and passive investing. By the way, you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index. I'm all full of disclosures. I'm like oozing disclosures today, regulatory disclosures, but they're important. So I'm told. Okay. So let's just take a look. We've got a few more people out there. Michael, thank you for joining me. Thank you so much. Judy's out there. And we've got a few peeps out there. Who this? Scott, we got you, buddy. Howard, what's your thought on FANG and Zoom? Well, I kind of gave you the thought. We could talk more about it. I don't think you should abandon any group of stocks just because they're going down today. But I think you need to have, the FANG stocks. But I've been saying for a long time, people are too heavy, I think, into these stocks. They've become such a major component of the S&P 500. The top 6 stocks are almost, 27, 28% of the index. And that's a pretty big stretch. Bless you, my friend. Take care of that cough. Thank you very much. It just started like an hour ago, and it's like that little drip. And I know the drip is going to stop like as soon as we're done with this live stream. Okay, so what do? First of all, if you're too heavy into the tech stocks, you've made a lot of money. You really need to make your decision whether or not you should rebalance. I've said this before. I pound the table on this. Make your decisions, your investment decisions, based on your own personal finance. Don't try to make it based on the election, or when the election is over, I'll get back in, or if my guy doesn't win, I'm out. If my guy wins, I'm in. Because you don't really know what the reactions are going to be like. You don't know how the House and the Senate are going to turn out. Really, if you make your decisions, financial decisions, whether if it's investing, spending, retirement, etc., make them based on your personal finance situation, and you'll always be right. It's a great way to go, and it's a great way that we can bring on some more control into our lives, as opposed to just betting one way or another. So if you want to get back in, you have to start to nibble. You have to pick your spots. Quick thing, and then I'm going to let you go. The Dow Jones Industrial Average is hardly an industrial average. I think we should change the name of that index to the Dow Jones American Average, because it's a really good representative of a cross-section of American companies. The S&P is very heavily skewed toward technology, which is why it didn't do as well as the Dow. The Dow is not as skewed toward technology, and the NASDAQ is very skewed toward technology, which is why it's down. And the small cap Russell 2000 index is, small caps, they're much more sensitive to the economy. So if the economy does well, small caps get a bigger boost typically than large caps typically. So this is what I want to impress upon you. And last thing, shame on you, Congress and the White House, because we could have had a deal on stimulus over a month ago. I've been saying here, when interest rates on the 10-year Treasury was at 0.65%, that would be a good time for stimulus. Now, interest rates are almost 0.95%. So the cost of borrowing is going up pretty quickly, which is causing even more rotation, by the way, out of bonds into stocks, out of tech, into the rest of the market. So we're getting a pretty big broadening of stock performance, which is why I am optimistic on stocks, but I'm not necessarily optimistic on just the S&P 500, because it has such a big component of tech stocks. And if that's where the money's being pulled from, then that will impact the that particular index more than the smaller companies getting those funds and going higher. Okay, thanks so much for watching. It was a great day in the street. Very interesting. We're going to find out if we can continue tomorrow. I will let you go, and I'll speak to you then. If you have any more questions, hit me up in the comments. Peace out.